Hi, Professor. This is yintaochen. Today, I will present my case study for the accounting in the headline activity. I choose Netflix as my example because it's one of the most well-known company in the entertainment and the streaming industry. Netflix also spent billions of dollars each year producing original content, which makes it a very interesting case for understanding how production investment are recorded in accounting. In this presentation, I will use Netflix content production to explain how financial transaction in entertainment industry are recorded use basic accounting principles. But of course, every number have been simplified to show my basic knowledge is not reflecting the real scenario from Netflix accounting department. So here we are. Um, as we know, Netflix has a huge content library, which has been invested by themselves. They have invested significant amount of money to produce original movie and the TV series. I believe since 2018. For example, let's take assumption that they produce a new original series may cost around $112 million. Instead of recording this cost as an expense immediately, Netflix record the production cost as the content asset. This is because the content is expected to generate revenue for multiple years through subscription. But in reality, Netflix capitalized billions of dollars in content library on its balance sheet, which reflects the long-term investment nature of a streaming content production. So this example could help to demonstrate how counting principle applied in the entertainment industry. Okay, so now we're looking at the transaction. The first transaction is the production investment. When Netflix pays to $120 million to produce a new TV series, the first journal entry should be debit to the content library for this amount. And then make a entry to the credit cash that's supposed to be the same. And from here, we can see that from the accounting equation, the assets should be liabilities plus equity. So after this transaction, the cash decreased by 220 million, while the content library, which we called assets, increased the same amount. So from the equation, the net total assets remain the same because one asset decreased while the other increased. So there will be no change. Okay, let's see the next one. So the second transaction is the subscription revenue because the first we have producing something. After we produce something, we expect to receive from the customer. For Netflix, the biggest revenue come from the subscription. The second, of course, the advertisement and the other cooperation with the other company, but we're only focused on the main revenue partial is the subscription revenue. So let's see. Subscriber pay monthly fee to access Netflix content. For example, if Netflix received $30 million in subscription revenue related to this show, which has been invested the 120 millions to produce. Now the journal entry should be for the debit is the cash will be increased for $30 million. And in correspondence, the credit should be recorded under the subscription revenue with the same amount. So still looking at the same accounting equation, assets equal to liability plus equity. Now, after this transaction, the cash increased by 30 million, and the equity increased through revenue, which means both assets and equity increased, maintain the accounting equation balance. Okay, let's see the third one. So we're looking at the third one. The third transaction is the content amortization. Netflix does not record the entire production cost as an expense at once. As previous mentioned, Netflix invests average 120 million to one production, but they're not able to record everything as expense because you are only able to receive 30 million subscription revenue per year. So you need to do, so they do the content amortization. The cost, which means the cost should be recognized gradually as the content generates the revenue. For example, if $20 million of the production cost is amortized in the first year, the journal entry should be 20 millions for the debit, and for credit is the content excess will be recorded correspondingly the same amount. This reduce of value of the content assets and the records part of the cost as an expense. So this follow the matching principle, meaning expense should be recognized in the same period as the revenue they help to generate. This approach helps financial statements better reflect the real profitability of streaming companies like Netflix. So compared to the subscription, the number is 30 million. And after the amortization, the 120 million has been divided into different parts. And for the first year is 20 million, which means 30 million is larger than 20 million, which means for the first year and the accounting, it's profitable. But the risk is if the subscription is not as good as expected, but the amortization will be existed as accounting entry every year. Then for the second or third year, or maybe the third or fifth year, it will lose the profits on the balance sheet. So that's the very basic three transaction we try to explain. Now, from this analysis, very simple analysis, many people believe that Netflix spend too much money on content production compared to the other other company in the streaming industry. But we have a overlook of the transactions The initial investment is 120 million. The revenue generated per year is 30 million. The amortized expense is 20 million. Still, we have the remaining excess is 100 million. So the accounting, which means accounting rules allow these production costs to be recorded as assets first, then expense gradually over time. That will make the company, the accounting very healthy, and that will make the management make the decision really precisely and more reasonably. And this accounting provides a more accurate representation of Netflix financial performance because the costs are matched with the revenue generated from the content, which means this more makes sense. It's a model that's the management trying to do the decision making. Overall, this example shows how accounting principle help explain the financial transaction in the entertainment industry. So this is the very basic study upon the entertainment industry. But after this study, I have a very basic but very clear understanding of the accounting. So we're looking forward to learn more from this course, and that really helpful. Thank you very much.